Hey everybody, Mark Hart here, and today we're going to take a deep dive into the financial addendum and how to reserve a property from MIP. Let's check it out. All right. So, what we're going to do every week is email you on Thursday at 1 p.m. Central Standard Time all the available properties, the turnkey and new construction properties from MIP. You can do a brief amount of due diligence directly there on the email. There's a click here for more information like the pro forma and the scope and the tax information and before renovation pictures. And if it is something that you're interested in, you would like to move forward with, on that email there, it says click here to reserve the property. And that's going to take you directly to our financial addendum. This is simply a way to keep us organized. We have created this using Google Forms. It's really easy to use. And most importantly, it gives us a timestamp and it notifies me via email directly that someone would like to move forward with a property. Hence, I will then give you a call to talk about the home, to go over the pro forma and the scope and the location to make sure it's a good fit for you. Now, when you actually fill out this form, that's what we're going to do together briefly, just so you can kind of get a better feeling of what this means. But I want you to know that when the email comes out, you do have to move very quickly. I mean, the houses are selling out in about 10 minutes. And when you fill out this form, it does not oblige you or force you to give us thousands of dollars. Right. This is just saying you would like to move forward with the house. You still have to talk to me on the phone. And once we talk on the phone, if for some reason you don't want the property anymore, well, no worries. You can just say, I'll pass and we'll give it to the next person. Right. So this is really just getting your, place in line so you can reach out to me to see if it's perfect for you. So what you'll do first, type in your email address here, um, then the name that you would like on title. We recommend only using one name, not putting your spouse on the title and the loan as well. And that's because you can get 10 loans per person. But if you're going to use both of your names, well, then on the mortgage, well, then that could essentially mean instead of getting 20 loans individually, you can only get 10 loans in total. This is something that we can change fairly quickly and easily if you want to move it into a trust, something of that nature. Um, and then next, we're going to have the address of the property that you would like to purchase. Sometimes it autofills with your personal primary home address. So we want to make sure that you know that this is the home that you want to move forward with and that you want to buy. So I'm just going to fill it out as a test, mark test. All right. So then here is where we have the buyer's information. One thing that we do request is that if there are going to be two names on the contract, that you give us both email addresses so we can send it to you via dot loop to sign. This is just your basic contact information, phone number, mailing address, uh, co-signer's email, and then are you self-employed? The reason we bring this question up right now is we've heard from the lenders that it's significantly more difficult to qualify if you're self-employed because of COVID. We had one of our clients who we've worked with for many years now, and she had to give 101 documents as a self-employed person to actually close on this property. So it did work out. It's just very, very difficult. So we just want to make sure, that if you are self-employed, that you're obviously completely pre-approved, and the lender is well aware of your situation. What they're really going to look for is during COVID, are you making more money or less money than last year's tax returns? And that's one of the biggies. As long as you're making equal to or more money during COVID, well, then there's a really good chance you can get approved for the loan. If not, it's going to be much more difficult. So we just want to make sure that you're aware of that on the front end. Are you self-employed? I am. Yes. All right. All right. So now is going to be your mortgage information. This is where we have a list of preferred lenders, and we created that list based off of just listening to our clients. And they said, this lender's amazing. I would love to use them. And we did use them. And now that they are amazing, and we add them onto our preferred lender list. And these are the guys that and girls that we're using hundreds of times a year, dozens of times a month. So we understand the process very well. There are no financial kickbacks. You are not forced to use one of these lenders. It's just right now we're getting about 5 offers per property. And I would say 4 out of those 5 people are pre-approved with a preferred lender. So if you go to the bottom and you say, I prefer to use an outside lender, just know that you're most likely not going to get a property. It's going to be very difficult to get one. What's great about these lenders as well is that they specialize in turnkey real estate. And so they understand, because a turnkey loan is different than the loan that you receive to buy your primary residence. Hence, the underwriting is different. And also, it's in Memphis, Tennessee. These guys and girls focus on Memphis. As well, what's great is that they're the big players. And if you want to diversify, maybe move to a different market, you can use them and buy turnkey rentals all over the country for the most part. And you don't have to get pre-approved with a different lender, because that is a pain. So we want to make sure that you get pre-approved with one lender and you can use them for all your mortgage needs. And that's exactly what we've created here on our preferred lender list. Now, the biggest one is the first question I'm going to ask as well is, are you pre-approved with the preferred lender, right? They're going to give you a little letter. You don't have to tell them, I know what address I want to move forward with. Normally, you just say, I want to get pre-approved for a property under $200,000. And they'll give you a little letter. You don't have to give us that letter, and we trust you. We just want to make sure that it's been updated. If you haven't bought a house in a year, you need to reach back out to your lender, because a lot of things have changed during COVID. So you need to reach out to them first and make sure you get an updated pre-approval letter. Because if you do not have an updated pre-approval letter, it's an automatic disqualifier, and we're going to go to the next person, unfortunately. So you can normally get those in less than a week. So it doesn't delay too much and it's not too difficult to acquire. All right, here's the next fun question. I won't lock in my interest rate until after the appraisal and home inspection have been completed. This is roughly 45 days after the contract has been signed. Now, what does this all mean? What's this about? The story behind this is when there have been some environments a few years ago where interest rates are rising, right? And so as a buyer, you want to lock in your rate today because you expect in the future for that rate to go up. Right now, it's kind of the opposite. They're actually going down. And what we ran into is that you're going to have a rate lock. It's only good for a few months. With our process, we still have to renovate the home. We still have to go through the home inspection and the appraisal and close, and that could take a lot of time. We may run into delays with the utility company, with code, with the construction crews. You never know. And if it takes longer than normal, we don't want you to be stressed because you have a certain deadline to close. Otherwise, you have to pay a fee. It's called a rate lock extension fee. It's not too expensive. It's just a few $100s, but we want to let you know that that is there and that's a risk. And we don't recommend locking in your rate until the rehab is done, the appraisal is done, and the home inspection is done, because we don't want you to come to us and say, oh, MIP, you have to pay for this rate lock fee because you took too long. Right? That's all we're trying to avoid. So if you're aware of that, that's the point of this video, and the transparency, you can lock in your rate whenever. Just you need to be aware that there could be a rate lock fee. And if it goes over, that's something that you'll have to pay for, not your lender and not us. All right. Next is going to be appraisals. So all of our contracts for single family houses are going to be contingent on appraisal. And what that means is essentially if the appraisal comes in low, we have to renegotiate. And if we can't come to an agreement, you can cancel and get your earnest money back. We just want to be, sorry about that. We want to be upfront with you. And that's why we have this section in here to where if the appraisal does come in low, this is what we're going to do. if it comes in just a little bit low, so up to $3,000 low, like $1,000 low, we're not going to change the sales price. It's going to stay the same. Okay. We're only going to adjust the sales price if the appraisal comes in really low, over $3,000 low. Let's say 10 grand low. So what we're going to do if it comes in 10 grand low, we're going to lower it 7,000 because the most you could ever pay, worst case scenario, is $3,000 over appraisal. And then that's how we're going to come up with your new sales price. So you can read this here. Actually, 80% of the time, statistically speaking, for the year, 80% of the time, our appraisals come in over value. 10% of the time this year, they come in exactly at value. I'm talking dollar for dollar. And then 10% of the time, they come in low. So statistically speaking, it's a low chance that it happens. Actually, you should get about just over $2,000 worth of equity day one. We've looked at all the appraisals. So that when the appraisals come in high, that's free equity. That just increases your net worth. It's one of the big benefits of owning real estate. But talking about the low appraisals, we have this example. The sales price is 100 grand and it appraises for 95,000. In your mind, you know that the most you could ever pay over appraisal is $3,000, not to exceed the sales price. So in this instance, we will lower the sales price 2,000 because the most you could pay over appraisal is 3,000, and your new sales price will be $98,000. So we just want to make sure that you understand how we're going to resolve a low appraisal issue on the front end, to where if it does come up on the back end, that's okay. Here's the process. Let's move forward and close. And so just want to make sure that you're aware of that. Now, you can also pay in cash for the properties. And a lot of the times, well, not a lot of times, but you're not required to get a mortgage, not a mortgage, an appraisal, sorry, if you pay in cash. Now, we recommend on every house, every time, that you get an appraisal and a home inspection, because if you close on the property and you buy the property from us in cash, now is the one time that we will negotiate the sales price if the appraisal comes in really, really low. If you want to refinance the property months or years down the road, and let's say that appraisal comes in low, well, unfortunately, there's nothing we can do. We can't adjust the sales price. So that's why we recommend getting the appraisal now. It's about $500 to $600 for the appraisal. So I'd definitely say it's worth it. But if you don't want it, we provide a comparable sale, basically a broker's paid opinion for free. So that is something that a lot of folks use when they don't want an appraisal. So as long as you let us know in the beginning if you want an appraisal or not when you buy in cash, we'd really appreciate it. All right. So the next one is the closing of this property won't be delayed due to other purchases or refinances. It's a big thing right now. Refinances are taking a really, really long time. And we know some people that have started a refinance back in the spring and they still haven't finished it yet. It's incredible. It's kind of ridiculous. And so what we want you to be aware of is that before moving forward with this property, we need to talk to your lender that's doing the refinance or the purchase of the other property. And we need to let them know, hey, you want to move forward with a turnkey from MIP, and we need to be able to close on our property separately from your refinance, separately from any other contracts that you have in escrow. Essentially, we can't delay the closing of our house because of something else that you're working on. Right. That's just something that we want to clear up before we go under contract. So what I recommend for you, if you are in escrow with another purchase, with another lender, doing a refinance, reach out to them first and let them know, hey, I want to buy a rental property. Is that okay? And then also with the preferred lender that you're going to get the mortgage from for the turnkey property, let them know that as well on the front end. And as long as you communicate to both parties, including us, then we can come to a good resolution. But a lot of the times it's recommended to just wait until all of those are done, just so it's a clean slate and you've got the best chance that things close on time without issues. The next item is going to be our earnest money deposit. This is going to be $5,000. It's a flat fee. It's not a percentage. So it's $5,000 per property. This earnest money is contingent on home inspection, financing if you're getting a mortgage, and appraisal. So you do have those protections there. If let's say the home inspection comes back and you absolutely hate the rehab and there's issues with the home that we won't fix for whatever reason, which is extremely rare, well, you can cancel and get your earnest money back. That's the way that's going to work. And we understand when you fill out this form, the property is most likely under renovation, so you don't know what the finished product is going to be like. And because of that, we understand, and that's why we put this contingency in place to kind of make sure that you have a protection as a buyer. And if something goes wrong, like the home inspection or a really low appraisal, you could technically cancel and get your earnest money back. All right. Next, how did you hear about MIP? We'd love to track this from an internal data and marketing standpoint. Helps us. Also, if a friend referred you, we owe them a referral fee. And so if you please put their contact information down, this is one of the best ways that we'll then reach out to them and let them know that they have a check coming their way. All right. And then here are the next steps. Highly recommend that you read this entire document here. This is what we're going to be sending you via email once the contracts get signed and the earnest money has been received. But we also want you to know that when you fill out this form, there's no guarantee that you have the property. Filling out this form just means that you want to move forward with the property, but normally there's other people that are filling out the form at the exact same time. So I will either reach out to you personally with a phone call or an email letting you know that you got the property. Congratulations, or unfortunately, we'll have to wait until next week. So I recommend you dive into this. You can kind of fill it out like I did so you can get all the way through. Just make sure you don't hit submit. Even if you do, it doesn't matter. It goes to me. I'll know it's a test, and really hope that made a lot of sense. This keeps us really organized, gets out some of the biggest common questions and objections on the front end as a nice upfront contract. And once we get those out of the way in the beginning, it just increases the chance that everything goes smoothly towards the end. And that's what we're here to accomplish. So I hope you liked the video. Please hit subscribe. Hope it was informative and you found some value. Let us know if you want anything else on the financial addendum, anything removed. We appreciate any and all feedback. And you guys have a good day.